Hi traders, and welcome to my video on the EMA Ribbon Indicator. In this video I'm going to show you how you can use this indicator to capture moves such as this one for around 400 pips and counting. So this is the Euro Dollar 1 hour chart in the MT4 trading platform. I've downloaded the EMA Ribbon Indicator online for free and I've attached it to the chart, which you can see here. The EMA indicator basically is red when the price is moving downwards or below the ribbon, and it's green when price is moving upwards or above the ribbon. You also have these arrows that show you when there's a cross in color. Okay, you can use this strategy on any trading instrument, Forex, stocks, cryptos, commodities, indices, etc. And any trading platform. You just probably need to source the ribbon indicator if you don't already have it included. You can also use this on any chart time frame. I'm using the 1 hour chart because I prefer longer term chart time frames, just as I find the signals are more reliable because there's more price data included within them. So I'll look at the 1 hour, 4 hour, daily, weekly, monthly. I mean, when you can catch moves like this for 300 to 400 pips in the space of a few weeks, I'm not sure why you'd stress yourself out with 1 minute and 5 minute charts, but each to their own. Okay, so for the EMA Ribbon strategy, we're looking to trend trade. So we're going to look to capture big trends like this. What I'm not going to do is I'm not going to buy and sell every time it changes colors. You can see that's not a good idea. If you buy here and you sell here, you buy here, you can just get chopped in and out of consolidated markets. But when that does happen, it's a good time to start marking your support and resistance to say that, okay, we're in a rangy, choppy market. Let's wait and see what happens. So we can draw our support and resistance in there. We can see if we zoom in that we have a triple top formation here, which is a level of resistance that has been tested at least 3 times. 1, 2, 3. We can draw our level of support within the triple top formation there. Okay, and the level of support is therefore known as the neckline in this instance. Okay, so we're going to look for a breakout of this level of support to the downside. And we get that here. Okay, if you want to be pedantic about it, you could say the support line should be here, which is absolutely fine. We kind of get the general consensus of where the support here is. Get the breakout, then have the pullback. Personally, I would have looked to have taken this pullback entry here. I just think that that's a nice sign that, the market's making these lower highs. Got the wedge, got this resistance here, nice wedge formation, consolidation here. I can see a 3 inside down candlestick formation there as well. Lots of bearish price action. You actually have a master candlestick there. So that's a good line of support. Extra confirmation, and you can see from this big breakout down, a lot of traders are watching this particular move. We know as well that this is a strong level of support. If we just plonk that in there, you can see here, even all the way back, as far back as here, this has been resistance, come support. And this is a big breakout here to the downside. So there's a lot of indications to take this short trade here. Okay, and not to mention the EMA ribbon had confirmed a nice down arrow. So this could have been an ideal opportunity to get in on a trend. If we zoom out, what would we have had? Well, almost 400 pips profit potential. And this, you might be thinking, well, how would you know to exit there? You wouldn't necessarily know to exit your trade there. But what you can do is after this breakout, initial stop loss I would put above this high here, which is around 15 pips, which is a really good stop loss for the 1 hour chart time frame. And then as price is moving down, you can just put your trailing stop above these highs here. So price moves down, has a pullback, continues, stop loss comes to here. Price moves down, has a pullback, continues, stop loss here, stop loss here, stop loss here, stop loss here. Just trailing your stop above the highs all the way down just to maximize the move as much as possible. And if we did that, we may have got taken out around here somewhere, which, is not bad for over 300 odd pips with a 15 pip stop loss. I mean, what I wouldn't want to do is have a fixed, okay, every trade must take profits 50 pips, let's say, because you get excited, you see these bearish candles, you exit your position for 50 pips there, happy days, you've made some profit, but you've left all of this on the table. Unless, of course, you try to re-enter on the way down, which we'll get into and can be done. But the more you do that, the higher your chances are of getting the trade wrong. You've got to pay your broker spreads and commissions, possible slippage as well. Nothing quite like getting into a good position earlier on, locking in the trade at break even to begin with, and then just trailing and even closing part of the position to bank some pips on the way down. Okay, so the EMA ribbon, as you can see, if you had missed this initial entry, there are other ways you can use it. You can wait for a pullback, okay, into the ribbon. So you see the pullback here, you could have sold there. You've got the pullback here, you could have sold there. Pullback here, you could have looked to have sold. If you did have your stop loss the other side of the ribbon or the recent high, you would have been okay, even though the price continued back there. That's the thing with the pullback. You don't just have to trade as soon as price makes a pullback. You can look to time your entry either on a breakout of the ribbon again, or what I would prefer to do is just mark my support levels. We're only selling because we're in a downtrend, so I'm just going to trade the breakouts. You can see that big breakout candle there if I zoom in for you. Traders are watching these levels. Okay, similar to the initial trade. Same principle, pullback and breakout. Pullback here. Okay. Look at that breakout. That is an NFP non-farmers payroll candle. First Friday of the month. Nice diamond formation there. So that was good to get in on that momentum. And after this pullback, as I said, you can just wait for a breakout of the support level before taking the trade into the trend. You know, wait for the market, because the market's making higher highs here. You really want it to be making those lower highs. Okay, and even short term, you can see nice breakout there to the downside, and just time your entry on the pullbacks into the trend. See, pullback there, pullback to here. I mean, not every pullback is going to be perfect, but you know, you can still jump in on this trend on ample opportunities. Pullback there, nice level of support, an M formation there, breakout to the downside. Okay, pull back in here, draw your support level, either trade that one there or the more shorter term support there. Big breakout to downside. Ample opportunities and no excuses not to get some love from this trend. Okay, again, this is a good example of with a pullback why you don't just want to jump in straight away, because if you jumped in here, granted, if your stop loss was here, you'd be okay, but that stop loss is going to be 50 pips, which is just too much in my opinion. So I'm going to wait for the pullback, then the price to continue, okay, and then wait for a breakout of the support. I'm drawing the support like that, and you can see from the breakout down there, bearish candlestick patterns. Even early as here, if you wanted to trade up here and risk, you know, the trade continuing to go in an upwards direction. But if that was the case and the stop loss was here, so you're only looking at 10 pips or so. But ideally, we want to get in earlier on. All this opportunity here, we don't really want to be selling at the low. So the EMA ribbon can be good for looking for pullbacks and getting into the trend. And as I said, tight stop loss and trailing on the way down. And then when the ribbon starts doing this choppiness again, as it did earlier up here, okay, it's when we don't want to be trading. Okay, we want to wait for a breakout one way or the other. Okay, I mean, even as far down as here, I can see on these pullbacks, if you're drawing your support carefully, you can ample opportunity to still, even as far down as here, getting on this trend. Nice M pattern there, but as I said, you don't want to be selling too low. With all the instruments you can trade in chart time frames, you don't need to force trades that may not necessarily be there. Okay, if we go to this uptrend here, again, same principles. Okay, the market's not as choppy here according to the EMA ribbon, but we can see our level of support. We can see price starting to make higher lows. Got our green arrow. After this big breakout, I mean, this is the thing about technical indicators. They can be lagging. Like if I'm zooming, if I'm looking at this scenario here, what I'm doing is I'm looking at the potential bear trap people trying to sell in on this trade late are going to get caught out, and it's going to cause momentum like this to the upside. And I'm just using support and resistance. I'm ignoring the ribbon because I can see a breakout trade there anyway. Yeah, some traders may even argue that this line here, okay, see this? Look, support becomes resistance, and when there's a breakout there to the upside and the market's making these higher lows, this is an entry opportunity potentially. Okay, granted it's early because price could continue ranging, it could continue downwards, but after this breakout and this breakout, I mean, people are taking their profits from this down move. The bears who are too late to the downwards move are going to get caught in a bear trap, and the momentum just causes this big move to the upside, okay, that we could have taken advantage of, or we could have waited for that to happen and then get in on the pullback. Okay, so again, we have the pullback. This is a bit messy just because we have this level up here, which I'd be cautious of buying into. As you can see here, it actually becomes support. So you might want to just wait for, especially after that, look at all that consolidation there. Once prices breach through here, having another pullback, again, then we end up with this level here. We do have a pullback. This is a better pullback here. Okay, you can see this pullback is too drastic the way it comes all the way down. Okay, that being said, there still is an opportunity to trade it based probably around this breakout here, I would say. So you have your pullback to the EMA ribbon. Okay, so pull back to the EMA ribbon around here. Breakout to the upside you could have got in there. Not a bad trade at all. I mean, 200 plus pips. Even this one here. Okay, well, we have the pullback to the ribbon. Pull back to the ribbon, have the breakout there. Still a good trade for 150 odd pips. Applying the same principle, stop loss below the lows, okay, and trailing it as price moves up just to lock in profit, perhaps closing part of the position on the way up. Pull back to the EMA ribbon here, draw your resistance level, breakout to the upside. Same here, pull back to the EMA ribbon, big candle. You can see, like, just look how big the candles are by the breakouts. I'll zoom in for you. Breakout candle, breakout candle, breakout candle, breakout candle. Yeah, there's no coincidence that there are these big candles around these areas because traders are trading the breakouts. I mean, even this one, I did say about this high level here, but if you look at the shorter term resistance, big breakout there. Okay, pull back to the EMA breakout. The importance is we're not selling in this scenario, okay? We're buying and we're timing when we buy. So the first thing we do is we don't sell, and then we don't buy when price is all the way out here either. Okay, we don't buy, wait for a pullback, time our entry into the trend and have good money management, and that way we can create a winning strategy. Yes, there will be losing trades, but if we cut our losing trades short and let winning trades run, we can be profitable at the end of the day. Especially if you've seen this move, if you're looking to buy up here, you really need to do a bit more practice. As soon as the market starts to make these lower highs and you see this consolidation, you want to avoid buying at the peak. All this opportunity on the way up. EMA ribbon to guide you, but to be honest, you do actually have a pullback up. So that pullback there, and then a big breakout on the pullback to the EMA upwards for one last rally. Even some traders here were trying to get in on the action. They were way too late to the party. I mean, this is a nice bull trap here, which is when the people who were in all the way down here are starting to take profits off the table. Got an M formation as well there. You can see that double top as well. Breakout to the downside. You could have started looking to sell in the other direction. Pullback, sell trade, pullback, sell trade. Okay. And yeah, some traders might argue, well, pullback there, sell trade. And this is why support levels are good, because when we have this pullback, why don't we sell? Because we know that there's a support around here. Okay, or even you're going to want, after these bars, you're going to want more of a pullback, and then by then we're in an uptrend. So yeah, the EMA ribbon can be good for pinpointing areas of potential entries into trends. However, it's not really 100% needed in my opinion, just because if we just take it away from the chart now, okay, I put a lot of lines on there, but if we just draw a trend line, okay, we can see the market's moving up. We don't buy when it's far away from the trend line. We wait for price to come back near the trend line or form these little pullbacks, because you do have your trend line as well there. Okay, pull back towards the trend lines and just buy on the breakouts. Breakouts are resistance for going long, breakouts support for going short, good money management, and we can have a good solid trading strategy. Okay, hopefully you found something useful in this video. I do appreciate you watching. Wish you all the luck with your trading strategy. Make sure you practice as much as possible, preferably on demo accounts. If you could like and subscribe, that'd be a great help. Again, thanks for watching. I hope to catch you on the next one. Take care.